Vanakkam. Today we are going to see another very interesting topic, how to arrive at the drawing power while you are carrying out the verification of working capital loans. The working capital loans have been sanctioned for the purpose of stock and debtors. It is as well as for the domestic loan as well as for the forex loan. There are a lot of confusions that you will be getting while you are verifying the working capital. So this is a very interesting topic, and how to arrive at the drawing power. This is a separate topic we are going to see today. Kindly watch each and every point so that at the end of the session, you will be a master in arriving at the drawing power. Okay. Here, first thing is with reference to stock statement verification, because the drawing power you have to apply only for the verification of stock and debtors. First, we are going to see the stock statement verification with a specific reference to drawing power. Please refer the sanction letter. From the sanction letter, you can say what is the working capital loan sanction. In that column, they say that the margin is the owner's contribution or borrower's contribution towards the stock. So you have to bring the margin also. That is the borrower has to bring the margin. So that point you have to see. So in the sanction letter, first you have to see what is the loan amount sanctioned that is towards the stock and what is the margin. Kindly take note of it. Next important point is that in the sanction letter, they mentioned that the stock statement has to be submitted by the borrower every month, or sometimes quarterly basis, or sometimes half-yearly basis, sometimes annual basis. This will be specifically given in the sanction letter. Recently, the government has introduced for the purpose of MSME working capital limits, the stock statement may be submitted on annual basis. So whatever may be the thing, you have to see the time of submission of stock statement by the borrower to the bank. It will be specifically mentioned in the sanction letter. This is the another thing that you can take from the sanction letter. And what is the date of submission? They say that the borrower has to submit the stock statement to the banker, that is on or before 7th of the following month or 10th of the following month. This will be specifically mentioned in the sanction letter. So kindly verify that date. You take note of the date of submission from the sanction letter. This is also another important point. Next one is there are two types of items that you have to verify. The borrower has to prepare the stock statement in the prescribed format of the bank. Then that stock statement has to be submitted by the borrower to the bank. And the borrower and the banker on receipt of the stock statement, he will see whether the stock statement is for the correct month, whether the stock statement is duly signed by the proprietor or the real borrower. And you have to see that the stock statement should not be signed by the staff of the customer or staff of the borrower. If it's a limited company, there may be financial officers. They may be authorized by the board to sign the stock statement. If that is the case, you can accept. Otherwise, the stock statement should be signed only by the borrower. In my audit experience, I can vouch in 50% of stock statements, I happen to see that those stock statements have been signed by the staff of the borrower, or sometimes it has not been signed at all. So this point you have to see. And after the receipt of the stock statement, the banker, they have to affix the chapa. That is, they have to affix the seal to see that the date of receipt of the stock statement. Now the stock statement has arrived. And the bank manager has to see whether the stock mentioned or have been tallied with the sanction letter. And this stock statement has to be properly recorded in the stock register. So that means it's a clear indication that the branch has to maintain a stock register. In the stock register, the stock statement receipt should be properly recorded. In that, they mention the date of receipt of the stock statement, that is under the borrower name, date of receipt of the stock statement, amount of total stock, less margin, what is the drawing power. Everything will be dealt clearly in the stock register. So the auditor has to see the stock statement as well as the stock register, and the drawing power should be arrived by the officer or manager of the branch, and he has to acknowledge the figure, and that figure has to be uploaded in the system. So the duty of the auditor is to see whether the borrower has submitted the stock statement and whether those stock statements have been properly recorded in the stock register. And in case if there is a delay in submission of the stock statement, yes, it will also possible. If that is the case, then the bank or branch, they have to levy a penal interest on the late submission, or we can say that the penal interest has to be levied on the borrower's loan account till the borrower has submitted the stock statement. So this point has to be seen by the auditor, and normally the penal interest should be 1% or 2%, and this will be clearly mentioned in the sanction letter. So delay in submission, if it is that, then the auditor has to work out the penal interest. And another very, very important thing that you have to see is that the items tallied with the sanction. The sanction letter mentions, say that the loan has been sanctioned for the purpose of furniture business, but sometimes some other items other than the furniture will be included or may be included in the stock statement, and that will be added to the total and they arrive at the drawing power. So if that is the case, you have to eliminate all those items which have not been considered in the sanction letter. So it is a duty of the auditor to see that the items tallied with the sanction. Next item is after submission of the stock statement, as per the direction given by the sanction by the head office in the sanction letter, the branch manager has to go to the spot and verify the unit and has to submit the inspection report. So the manager, it is the bounden duty of the manager to go and verify the stock statement and verify the unit also and give his inspection report. This also has to be verified by the auditor, and the auditor has to confirm the manager has carried out the inspection or not. If the manager has not carried out the inspection, then that has to be reported in the audit report. Next one is LC stock, letter of credit stock, should not be included in the stock. The concept of LC is the stock belongs to, ownership of stock belongs to the supplier. Till it has been paid, then the ownership lies with the stock of the supplier. That is, ownership lies with the person who has supplied the goods. So that stock should not be included in the list of the stock. So this is also another very important point that you have to see. Then only after considering all the above, drawing power has to be calculated. We will see how to arrive at the drawing power in the separate slide. Next thing is items should not be included in the stock while arriving at the drawing power. So these items should not be included in the stock. That means only paid stock is entitled or is eligible to be considered towards calculating the drawing power. So what are all those items which have not been included or which have not been considered as a paid stock should be eliminated? Let us see the list. Let us see the list. One is sundry creditors. You have to deduct the sundry creditors from the total stock. Then you have to eliminate the obsolete stock. You have to eliminate the non-moving stock, and as well as the dead stock also you have to remove. Then LC stock should not be included in the list of the stock. So these items should be excluded from the total stock. Next item we have to see is that we can work out the drawing power with reference to debtors also, and the following items should not be included in the total debtors. Only those debtors age permitted, that is, they may say that 90 days, only up to 90 days debtors we will consider. The debtors exceeding 90 days we will not consider. So those debtors should be eliminated from the total debtors list. And what are the things that is debts above 90 days or 120 days? These age of the debtors will be specifically mentioned in the sanction letter. And sister concern debts also you have to eliminate. You should not add those sister concern debts. And bad debts, even if it is less than 90 days also or less than 120 days also, if the auditor feels that they are all bad debts, then those bad debts should also be excluded from the debtors. And in case if there is any disputed debtors and if the case is pending before the court, or if there is any complaint made against the debtors, those debtors should also be not considered while arriving at the drawing power of with reference to debtors. And what is a debtor statement? That is the other important item that as an auditor we have to see the auditor has to verify the sanction letter, and the auditor has to see what is the total amount that the bank has given towards the debtors and what is the margin. That is, margin is the borrower's contribution towards the debtors. That also you have to take from the debtors, I mean from the sanction letter. Then age-wise you have to get the list, and as well as the customer-wise also you have to get the list. Age-wise, so in order to arrive at the 90 days or more than 90 days for to arrive at, you have to instruct the branch to get the all the debtor statement on age wise as well as the customer wise in order to identify the sister consultants. So you have to get the customer wise debtors list as well as the age wise debtors list. Then you have to also get the list of the sister consultants. Here one can have the doubt where we can get the list of the sister consultants. This you can get from the process note that is being prepared by the bank. So the sister consultants details are all those details you can get from the process note. Otherwise, even you can get the sister consult details from the branch manager also, but everything has to be confirmed on record. So sister consultants should not be considered while arriving at the drawing power with references debtors. And next one is if there is an accumulation of the debtors and there is if the auditor feels that there is no recovery and all those debtors are become bad debts, all these reasons have to be analyzed by the auditor with reference to drawing power. Next one is that it's a very important thing. It's a very important thing that is specifically mentioned in the sanction letter saying that once in 6 months or once in 3 months or once in 9 months, the borrower has to get a certificate from the chartered accountant with reference to the list of the debtors. The list of the debtors includes name of the debtors, age of the debtors, and uh, other, if there is any dispute or not, everything will be specifically mentioned by the CA certificate, by the chartered accountant in his certificate. So this certificate has to be submitted by the borrower to the bank once in a quarter or half yearly, but everything it depends on the sanction letter. Non-submission of CA certificate as per the sanction letter also will attract the penal interest. This is normally we are not doing. Most of the auditors, they are not considering or looking into this point. In case if the stock statement, I mean, creditors, sorry, in case if it is the debtor statements have not been duly signed by chartered accountant once in a quarter, once in a half yearly, as per the sanction letter, then the banker branches, they have to levy the penal interest. And here I want to give only one advice. Please don't sign other auditor's case with reference to the stock and debtor certificate. If it is your case, you please sign. Otherwise, if you sign for other auditor's case, you may land into a lot of problems. So only advice I want to give to you. And you have to analyze the bad debts. Why these debts have become bad. All this as an auditor, you have to analyze. Next area is, now we are going to explain on the chart basis. That is, this is the total stock, less absolute stock, less creditor stock, less LC stock, less debt stock. All these stocks should be deducted from point number 1, that is total stock. Point number 3 is called as the paid stock. Well, point number 3 is called as the paid stock. From the paid stock, deduct the margin as mentioned in the sanction letter. Let us take it is 25%. You deduct. And point number 5 is the drawing power that you can get from the stock. So total stock, less absolute stock, less creditor stock, less creditors, less LC stock, less debt stock. That is called as paid stock. From the paid stock, deduct the margin. Then you can arrive at the drawing power with reference to stock. Next one is drawing power with reference to total debtors. You have to take total book debts, less debts above 90 days, because as per the sanction letter, if they say that the debts above 90 days will not be considered, you have to exclude those debts and arrive at the net book debts. From the net book debts, you have to deduct the margin. Then it works out to remaining amount is called as drawing power. Suppose point number 3 is a total book test and the margin is 40% as per the sanction letter, and point number 5 you see drawing power. Now you have got drawing power as per the stock. Now you have got the drawing power as per the debtors. Now you have to add both the thing and arrive at the total drawing power. Sometimes the stock may be in negative, sometimes the debtor may be in negative in the drawing power. If that is the case, then only the net drawing power has to be taken into the account. So this is a very important thing. Sometimes when you work out the stock may be in negative, but debtor may be plus. So you can net the figure and arrive at the total drawing power. This point you have to remember and compare the total drawing power with the outstanding balance as mentioned, as stated in the cash credit account of the borrower. So drawing power as per stock, drawing power as per debtors, add, and you have to compare the total drawing power with the outstanding balance. Now, what is the implication? Why we have to compare this with the thing? So penal interest has to be applied. In case if the drawing power exceeds the outstanding balance, that means everything is in order, no penal interest has to be charged. And in case if the outstanding balance exceeds the drawing power, that means that is borrower has utilized the banker's funds. So for that, the bankers, they will levy penal interest in case if the outstanding balance exceeds the drawing power. This is also the role of the auditor. This is also the main role of the auditor to verify. Please verify whether the drawing power exceeds the outstanding balance or outstanding balance exceeds the drawing power, and the penal interest has to be paid or has to be levied till it is regularized. This is a very, very important thing. Till the drawing power is regularized, penal interest has to be collected from the party. And now, another highlights of drawing power is all the rules of IRAP norms are applicable. If the drawing power has exceeded continuously for more than 90 days, then that account may become NPA, non-performing asset. This is a very, very important thing. In case if the outstanding limit, there is drawing power, if the outstanding balance exceeds the drawing power for a continuous period of 90 days, then that account will become NPA. This is what I want to say with reference to the drawing power calculation. So drawing power calculation is very, very important. While you are verifying the working capital limit, please go through the presentation very carefully, and you will be a master if you do this or if you watch this program with reference to the drawing power. The opinion, the views I've expressed in this presentation is my view. For any clarification, you can call me or you can refer the Banking Regulation Act so that you can arrive at the exact drawing power. So I wish you all the best, members, and thank you very much for the patient watching of this program. Nandri, Vanakkam.